Hi, I'm Mike Cintolo, editor of Cabot Market Letter and Cabot Top 10 Report, and I'm here with your Cabot Weekly Review. And it was a good week for the market, confirmed its recent rally on the upside, and that means it's time to buy some stocks. As you look at a chart here of the S&P 600 small caps have been the leading index so far, by the way. But notice how even though the index, the small cap, and all the indexes bottomed on February 5th, we like to wait for this thin red line, which is a 25-day moving average, to begin turning up, which it has now for this index and for all the indexes. That just gives you the added confidence that the intermediate term trend is actually pointing up and the odds favor higher prices. So what do? You buy some stocks, and then if you begin to make money, you buy some more. And if you make more money, you buy some more. It won't take long to get heavily invested just following that gradual approach. One concept I wanted to emphasize right now is the concept of unusual strength early on in a market advance. We've had a correction. A lot of stocks have built 3 or 4 month bases. And here's a stock like Baidu, probably the #1 institutional growth stock, breaking out on big volume on earnings and really just stair-stepping its way higher ever since. Even though it looks extended, and it is extended above its moving averages, our experience is that the stocks that are most extended early on in advance are really your leaders. Now at some point you'll get a pullback, but the pullback might be 3 or 4 or 5% and not 10 or 15%, assuming the market is healthy. Another one to consider is Cleveland-Cliffs, CLF. This company makes iron ore, the price of which is going nuts. Earnings could be huge this year. What's unusual about this is it had its correction. It held $40 pretty well, but then it just shot from 40 to 60, up 50%. Now most people will just write it off at this point saying, it just went up 50%. But to us, happening this early in the advance, really during the correction and now as the market has confirmed its advance, it tells us it's an early sign of leadership. Volume has been huge on the upside as well. So really any pullback, you see this little pullback from 60 to almost 56, you might want to just buy a little anytime you see a pullback like that and then just see how it goes. If you start to make money again, you can buy some more. Another concept I wanted to emphasize is that of you need a base, you need a breakout, but you also need follow through. So don't get too hyped up. I mean, you should get excited about a breakout. Here's Walter Energy, WLT, a nice cup with handle base. It breaks out this week, and now you want to see the stock follow through to the upside. If you see a lot of stocks break out, which we have, that's good. But then you want to see a lot of stocks follow through on the upside. That's better, and that will give you the added confidence that this market rally is for real, which we believe it is, because there are a lot of stocks setting up like Walter Energy. Okay, so what things are we looking at here? Ford Motor, nice breakout above 12 bucks here on good volume. It's been choppy, but it's continued higher. You'd like to see it up maybe above 13 or even higher. Up 10% from the breakout pretty quickly gives you a clue that the institutions really are buying this. We like Ford. As for one still setting up, here's CTrip. Okay, notice how it's built this base. It's come around. Interesting to note here, it was up 13 of 14 days during this stretch. That's a good sign of persistent demand. Now it's consolidating. It's gotten a share offering out of the way. Ideally, you get a few more days of consolidation, then boom, a breakout above 40. Aruba Networks, I really like this chart. It's lower price stock. A little choppier, but a big breakout on earnings here. It's been consolidating tightly the last couple of weeks. All the volume clues have been very bullish. We think it's probably viable around here or even on weakness, but a big move above 12 3/4 on volume would also be bullish. And here's a new name to check out, Avago Technologies, AVGO. This most recent consolidation is nice and rounded. It's choppier, so it's going to be hard to handle. It has caught fire the past few days. Again, like CTrip, you'd like to see it back off for maybe a couple of days and then resume its advance, and you can buy it on that renewed strength. Well, that's all the time I have for this week. Thanks for being here, and join us again next week for another edition of Cabot Weekly Review.